Today is Tuesday, October 18th, 2022. I heard from many pro day traders that stocks move in a predictable manner. And uh, what I want to explore are essentially three different categories. The first category is if the stock has very positive news, and the pre-market data shows that uh, it has uh, it has increased in market price uh, in a big way. So before the market opens, the stock has moved big. So when I look at that, and usually to I'm hesitant to believe that um, I'm hesitant to believe that it's going to keep going up. The reason is I'm thinking anybody who is interested in the stock must have bought already, and the price already reflects what the value should be, and that's why it's at a very high level. And further increase may not occur, and most likely there will be people uh, who have uh, who have bought the stock pre-market or even the previous session are willing to sell, and that means when the market opens, there'll be a lot of people who are going to just sell into the opening, and what it will do is there'll be a dip, and if it turns out that the news is truly very good and stable, it's going to keep climbing up above the open price and eventually set a higher high. Now that's what's going to happen. So the second part is exactly opposite of that. When the news is bad and then legitimately it's been verified, and what it will do is it'll slightly come back up because of the profit taking people. And then after it comes up slightly, then it'll start to climb down again. So essentially, it's a mirror impact effect of a solid good and bad news. So something that opens up somewhere in the middle, it could vary because it's based on essentially what the market price dictates. And so normally what happens if it opens somewhere in between those areas of the extreme gain or extreme loss, what will happen to the stock is that it will reflect what the indices are doing, and so it'll move in unison with what the stock would do, what the indices are doing. And so when a pro stated, I had this conversation with another pro, and he stated that anything in between is difficult to gauge what the stock will do. However, if it's actually above what the previous close is and or lower than what the previous close is, the chances of stock moving further is higher because not all the buying or selling has occurred in pre-market because the number of shares are limited. And therefore, when more shares are available to sell or buy, the impact on the price of the stock will be higher and the movement in the stock will be higher as well. And so, statistically speaking, when the stock with good news, sufficiently good news that is stable and significant, the movement in that direction will be enhanced. And therefore, there is a possibility to take profit from the situation from opening to the point where the sufficient amount of gain is achieved. However, in the case where the stock is somewhere in between, um, I'm just thinking about what's going to happen tomorrow. I mean, Netflix came out as a perfect example. It's up almost 10%, I think, pre-market. It's up like 35. So it's essentially what a Netflix is doing. I mean, it is really. I mean, the news is a very positive number for that stock. I mean, it's very positive. I'm looking at the stock right now, um, and it looks like it's going to just buoy the whole market tomorrow. And unfortunately for me, I had three, and then I sold out. And right after I sold and the close, I see that the aftermarket value has increased. So we're looking at about a 275 minus, so it's about 35, approximately about 12% gain pre-market, after post-market. I mean, we're talking about a 12% gain here. That's going to impact practically every stock in the market because it is a somewhat of a reflection of what the market is doing and what the software industries are doing with this particular company. So essentially, I need to be aware. I need to be aware of how the stocks behave based on news. And so, what most likely will happen with a sympathy play is that stocks like Apple and something like Amazon, right? That's probably why Amazon has gone up past 2 to 3 days. So essentially, um, the way that the stocks move is like that, and then moves up, overshoot, and then comes back like that. So essentially, what it will do is it'll open. There will be profit taking, which will cause it to dip a little bit, and then because the news is significant, it'll keep climbing up. And as it keeps climbing up, then there will be an overshoot, which is here, and then drop back down and settle on a price that it'll stabilize to itself. So this is a typical known behavior of a sufficiently good news, or sufficiently known bad news to the company, which will cause the stock to dip, profit taking, drop, overshoot, and then come back down like that. So that is a typical behavior that is repeatable everywhere. The span or the distance between one point to one point may be shrunk because of the responsiveness of how trading is done these days, but the pattern repeats itself. The pattern, like some of the professional day traders say, it repeats itself every day. It repeats. It has been repeating since the market has opened. Since the inception of the market, this type of pattern has been occurring again and again and again. So essentially, looking at it with a sufficient news, I suspect tomorrow's news based on Netflix is sufficiently credible, which means that there will be a leg in the movement, and therefore the initial open will not reflect on the value of what the end day value will be for a vast majority of the stocks that are in the market right now because of this news.